So okay, I understand that people like to pay off mortgage, like, because when you pay off earlier, you can save interest. The second thing, your return is equals to the interest. That means the interest rate, let's say they charge you 3%, then the return you get for paying more will be same as the interest rate. And I think the main reason will be like no commitment. Mortgage account, you have to pay regular fixed amount each month, right, at a fixed term. Yeah, that's your mortgage installment. Condition 2, you can pay more but not less. When you miss a few payments, your previous payment might be forfeited, because when you cannot pay for a few months consecutively, your property will be auctioned. Condition number 3 is that the more you pay, the less return you get. Okay, for example, let's start with a 90% LTV. That means when your property is 500,000, you borrow 450,000. Then you have to fork out another 5% for the transaction costs, right? Commission or like stamp duty, maybe some furnishing, all those, right? And then the mortgage you borrow from the bank, like it's 450,000, okay, at a 3% interest rate, and tenure of 30 years, 360 payments of 1,897 ringgit per month. Now we have an assumption. So the assumption is that the net rental you get from this property, the net rental will be 1,897. So it's the same as an installment. So in between these 30 years, you don't have to fork out any money, and that means you just have to fork out as the start 75,000, and you don't have any cash flow issue because all covered with the rental. So after 5 years, you sell this. How much is left in your outstanding mortgage? So this one you have to have an amortization schedule. So after 5 years, when you sell it, you still owe mortgage 400,078 ringgit. So that means you make a profit of 700,000 minus 400,000, and you got roughly 300,000 return, right? So we calculate the compound annual growth rate from 75,000. That means your money stuck there only 75,000. It become 300,000 in 5 years. Now let's look at 60% LTV. So everything the same, rental the same, but installment is less. So the growth rate is also not bad still, 16.7%. But it is much lower than the one with the higher LTV. It's actually very simple. No, you don't have to do this spreadsheet because we kind of just know because of the leverage. Condition number 4. So the more you pay for the mortgage, right? So the money actually built up in your home equity. So if you want to get the equity out from your properties, how do you do that? First thing you can do is sell the property, then you get the money out, right? And then the second, of course, you can do financing. You can do refinancing. So you can refinance. Now we get to the condition number 5. The more you invest in account H, the higher the taxes. Your income tax might increase. This is actually one of my property. Based on this 6,200, I pay tax to the government. So when you pay more to reduce the mortgage, the interest portion go down. When I get more rental income, that means I pay more tax, right? Next one, this is my preference. I don't pay off mortgages because I want to have more capital to invest in other things, in stocks or maybe in other properties, or invest in my business. And then you say when you pay off your mortgage, you lock the return same as the interest. I don't pay it off because I want to get a return higher than the interest. And the third reason, I make sure that my asset is more than that, so actually I can pay off the mortgage. So let me conclude. So the whole session is just to explain to you. I come with a framework. So that's when regarding mortgage, I will see it this way. I say mortgage is actually the number one source of cheap capital funding for investment businesses. When your equity of your property is substantial, then you can refinance or do the top-up loan and refinance to a lower interest as well. And then mortgage tenure, I always choose as long as possible so that my commitment is low. So have at least one flexi loan to park cash. That means the loan is linked to a flexi current account where you can take money out, and when you have extra cash, you don't know what to do yet, or you're still waiting for the next opportunity, then you can park your cash there. I actually never bother to pay off mortgage. So like when I have loan moratorium, I take it.